I thought I'd talk a little bit about what alternative investments are because it's been coming up in my office now for whatever reason. A couple of clients have asked me about it. So, in order to talk about alternatives, we kind of need to talk about, well, what is the core? What is normal? What is regular? So, let's talk about that. So, what I would consider normal, core, regular is classic stocks, bonds, cash. And you have access to these usually in your 401ks or in your brokerage accounts or your index funds. Very common to own these, and they're widely available now, right? We can do that by going to any wirehouse like a Vanguard or Ameriprise or Fidelity. We have them available on my wealth management platform, which just happens to be AssetMark. But you're just getting exposure to the what I'll call the regular or normal markets: stocks, bonds, cash. What alternatives are not that. And what alternatives are generally trying to do is not track the stock market or the bond market or what's going on with cash. And the idea is that you're using these alternatives to balance out the portfolio or provide another level of ballast to it. And it might be the rock star of the portfolio in any particular year, and it might be the saving grace of a portfolio in any particular year. And let's talk about what they are. So alternatives can be things like, I think the most accessible one that people can get their heads around is investment real estate. I would consider that an alternative investment. Not everybody's going to invest in real estate. You can't walk into a Fidelity or a Vanguard and own real estate and manage it yourself. Now, of course, you can invest in a real estate investment trust, right? You could do something like that. But really, when I think about in real estate as an investment, I would lump it into the alternative category, although it's so common these days that I don't think people really think about it as an alternative. There's commodities, like I would consider that an alternative: gold, natural gas. These are commodities, but these are also often accessible in mutual funds and ETFs, and you can get pretty easy access to them through not necessarily your 401k, but if you have an individual brokerage account, then you can get access to them somewhat easily. And I would still consider them an alternative investment. They tend not to track necessarily with stocks or with bonds or with cash. There's private equity. That's another example of an alternative. Private equity is a pool of funds that is invested in private businesses. And they are usually, these private equity funds have specialties in particular types of businesses, and they buy them and they own them, and they usually will have somebody come in and run them or help run them, and then they expect to turn a profit on that particular purchase. And they'll sell often those businesses to another private equity fund down the road. I have been part of companies who have been sold in that way. Hedge funds is another alternative investment. These tend to be places where people, and usually very wealthy people, will place their money. And hedge funds will generally take much larger risks because they're looking for much greater returns. And so that is another, what I would consider an alternative. It's really not designed to track with stocks or bonds or cash. It's really designed to go do its own thing and oftentimes to shoot for the moon. Another alternatives would be art or collectibles. You can buy these things. They can increase in value. You can sell them later. Oftentimes people are collecting things because they just love to collect things, but there are people out there that buy art or collectibles because they're really buying them as an investment. They're thinking they're going to be worth more at a later time. I would consider that an alternative. Cryptocurrency, I would still consider these days an alternative. Again, not necessarily tracking with stocks or bonds. It's its own animal. It's got its own market. It has its own life, separate, again, from what I'll call traditional investments of stocks, bonds, and cash. So these are great examples of alternative investments. And the reason that I think most people have them, if they are interested in them, is they want something in their portfolio that's not going to track with stocks and bonds, that is going to move independent of those things. And again, it's either going to be the rock star of the portfolio or it's going to be the ballast of the portfolio that brings it some stability. We had a couple years ago and both stocks and bonds were down, and alternative investments kind of saved a lot of portfolios. Now, I think when you're thinking about what the allocation should be, I think you really want to have a very small portion of your overall wealth in an alternative position. So if you're going to look into alternatives, I would say probably no more than 10%. There's some people that would go higher than that, but that's about what you're looking at in conjunction with your stocks and your bonds and your cash. And now I can just see the calls coming to my house. Well, Jessica, I own all this real estate and I'm cash poor. And I know that, but that's also because they know real estate. They're managing it themselves, or they're managing the manager. And so they're really running a very different kind of wealth strategy. But for most of us who are investing in our 401ks or have individual brokerage accounts or joint accounts that are usually investing in stocks, bonds, and cash, the alternatives is just providing another little balance to it. So that's what alternatives are all about. And if you want to investigate whether or not they should be part of your overall portfolio, you want to make contact with your financial planner, or you're welcome to reach out to me. I'm Jessica Lanning. Lanning does planning.